Let's take a look at some charts on Monero from this week's article on Brave New Coin. So whenever we have a coin that's a specific type, as far as the way a coin operates, I like to compare it to its neighbors, and XMR is considered a privacy coin, using privacy by default. So we cannot, for instance, look at daily active addresses, and we cannot look at daily transaction volume for XMR or GRIN. So for many people, that automatically disqualifies all the other coins as privacy coins because they have optional privacy. XMR currently leads in market cap and daily fees, and it's second in transactions per day and GitHub commits. So Dash uses a similar mixing service, CoinJoin situation, whereas XMR uses ring signatures. I'm not too sure why the fees are as high as they are on Monero, but given the ironclad privacy, I don't see that it's that much of a concern. People know what they're getting with that fee cost. Also points to potential scaling issues over the long term if this starts to balloon out of control. I don't really see any on-chain stuff that suggests that currently, as far as block size ballooning or anything like that. But in general, XMR is probably where it wants to be as far as in comparison to the other coins where you can compare them. Looking at hash rate and difficulty for Monero. So in November 2019, they switched their algorithm. So this whole chart is like paper clips and bananas. You can't really compare the two. The algorithm now is random X, and it's CPU mining advantageous. So the hashes are just different than previously crypto night algorithm. So although this looks like an all-time high, you really just can't compare it. We need months and months, probably 2 years of data to really know what's going on here with hash rate. As far as, is it rising, is it falling, what's relevant here? Because all of this was just kicking A6 off the chain, and then they finally just said, all right, we're really going to kick A6 off the chain, change up the algorithm completely. Looking at the miner pools, there was some concern by me as far as the centralization issue. You don't want two pools with over 51%. You certainly don't want one pool over 51%. This is slowly starting to diversify, certainly better than the previous 2 months, but likely more centralized than people would want it to be. So I expect over time this to even out a little bit as more of these pools offer CPU mining or more CPU mining comes online, that sort of thing. You'd expect this unknown pool to actually be the highest slice, but these other two pools are probably just really good for low hash rate miners with fees and that sort of thing. If we look at Monero's inflation versus Bitcoin's inflation, they actually did a little dance here as far as who was lower. Both are relatively low, especially when compared to everything else. So Bitcoin's around 1.8, Monero's around 2, I think. This is the Bitcoin supply and the Monero supply. The difference being Monero will have a supply indefinitely, whereas BTC will have a terminal supply of around 18 million. So it'll be an interesting experiment in like 2060 or whatever. The last block reward is set for BTC, because there's always a concern that without a block reward that the security of the chain is in jeopardy. So with Monero, the idea being there's always some sort of block reward emission to subsidize the security of the chain. Whereas in BTC's case, the idea is that the fees and price will eventually take over to secure the chain. If we look at transactions per day and difficulty, this is most likely all mining related. This is difficulty in the fill here. So after November, there was a lot more transactions on the chain. So my guess is most of this is mining activity related, way past all-time highs. These spikes in difficulty and spikes in transactions per day, semi-related to price here in July, June, but most likely related to mining botnets or mining pools, that sort of thing. So it's difficult to tease apart what this exactly is because, again, this difficulty in the network is completely different than what it used to be as far as the algorithm is concerned. But in general, this is a bullish picture to see transactions on a chain rising. If we look at fees, average transaction fees across all those privacy coins again, here's Monero here in the red. Pivx is the only higher cost, and it's got virtually no transactions on the chain. So to me, that points to scalability issues. Zeek in the brown, Dash in the aquamarine, Decred in the blue here, Grin way down here. So based on usage and privacy not being optional, I don't personally see a big deal with XMR being more expensive than its peers, just based on the use of the network. Now this is Google Trends for Monero. Doesn't look great, obviously. Basically near multi-year lows, just a flat line. One thing that might not stick out in the article was the Asian exchanges delisting Monero to comply with regulations because of its privacy. So it's this interesting catch-22 where it's really good at privacy, but it also is so good exchanges are afraid to list it because of regulatory backlash. And if it's not listed on an exchange, it has a harder time having a bullish price. So very interesting from that perspective what the future of Monero is. If it gets delisted everywhere and doesn't get listed anywhere, it's just going to sit on dexes and nobody can buy it. So if nobody can buy it, miners are just going to be selling it on dexes, right? So it's going to be difficult if Monero's delisted everywhere to move up in price and value, even though it's really good at what it does. Looking at technicals, Bitfinex long shorts, nothing really to say there. RSI, pretty flat, although there's a decent case for a bearish divergence. Higher highs in price, lower highs in RSI. Really what sticks out to me is this upcoming golden cross, which has occurred by now. You can see the last golden cross was a bit late. There wasn't any extra momentum there. The golden cross here had some upward momentum, but in general just flat. Really all the bear crosses have had all the momentum historically over the past 2 years. So when we get a golden cross, it says look for longs over shorts, buy the dip, that sort of thing. It's at a yearly pivot, these lines here. So if it can break above the yearly pivot with a golden cross, I certainly expect it to reach for the 90s, the 100 level, previous local high, that sort of thing, the pivot. Nice smattering of resistance here between the VPVR levels, the pivot, the local high. But it does look good for up, considering where it was making multi-year lows in March. And it's above this VPVR level. Probably the most important thing. It's not smacking on the ceiling of this level. It's well above it at this point. Looking at the cloud, this is exactly the bullish picture you want to see. You want to see the cloud flip bullish. You want to see price above cloud. You want to see the TK cross bullish. You want to see lagging span, this green line above cloud, above price. So all of this looks exactly how you'd want for a bull trend to start. The one thing that could make this look a little better is if the TK lines were actually above the cloud, and that'll happen slowly over time if this holds the $65 level. So really this is a picture perfect. It's sideways out of the cloud, the TK lines are above the cloud. You get this Kijun bounce and it's off to the race from there, right? That's what you want to see. So bids on the Kijun, let it work itself out, but it looks very good for bullish continuation. Looking at XMR BTC, looks pretty dire. Below the cloud, below the 200, VPVR has plenty of upside resistance. Really the last support is around 0065. So if we drop below there, it's probably headed to 004, these previous highs. Really there's a big bite out of any support on the way down here. This also kind of looks like a head and shoulders at the bottom of a trend, which is extremely bearish. So not exactly things that want to tempt me for a long here until it's back above the 200, back above the cloud around 008. And 0011 has significant resistance. So definitely an interesting dichotomy between the USD and BTC pairs, in that the BTC pair looks like it's headed for a nice bull run, but it probably won't outpace BTC based on this XMR BTC chart. So this may just continue to range sideways indefinitely. You know, BTC may underperform XMR briefly, and then XMR pulls up slightly. But in general, I don't expect this XMR BTC pair to be bullish anytime soon.